Hello everyone and welcome back to part 2 of lecture 5. In this part we will focus on the contract. So now we will get into the details of each contract. We will begin with conventional insurance contract. So it's a contract of buy and sale. Someone is buying, another is selling some item or service. So the participant here is the buyer. They buy coverage from the operator in return for the operator agreement to cover against misunfortunates occurred. Okay, so is it permissible in Islam? No, for a specified reason. The reason here again is not the concept of the contract. Protecting one another is, as a concept, is actually recommended in Sharia. However, it doesn't fulfill the Sharia principles in buy and sale contract. So you said this is a buy and sale contract. Buy and sale contract, they must satisfy few requirements in Islamic finance. This does not satisfy all the requirements. However, Takaful is a contract based on the concepts of tabarru', mudaraba, and could be also wakala, or a mixture of the last two. However, the tabarru' concept will always be there. So let's go to buy and sale contract and see the requirements in Sharia. So in muamalat, buy and sale require the exchange of good against price or service. If we look at the diagram, the insured paid the premium, and in return, if anything happened to the insured, I will be eligible to receive a certain amount of claim. So while the insurer owned the price, so we discussed that the first part, my obligation towards the insurer. So I am a participant, I fulfilled my obligation, I paid you a specified price. Okay, price is determined, all clear, no problem. Let's go to the second part, the sale. The other party, the insurer providing the service here. It also must satisfy few requirements. The insured is still uncertain. So what's the service am I getting? Compensation. When? We never know. How much? Not clear. So we are uncertain whether we will get the coverage or not in the first place. If we don't get basically some loss due to some risk, we will not get anything. So we paid a price for nothing. Again, forget about the aim of the company, what are we doing here, but this is tantamount to gambling. So I pay you a certain amount of money, I am never sure if I'm getting anything back. Okay, so I might get less than the amount I paid, or might get nothing, or I might get more than the amount, or I might get the same amount. So looking at it from the outside, it looks like a gambling contract, but for a good reason, not for a game. It's basically to protect each other. So it's for the well-being of the community, which is something recommended in Islam. However, it's not done like this. We cannot do it this way. So the underlying philosophy for the prohibition of insurance is that the insurer assumes the risk for a fee. So insurer's job here to say, you want to protect yourself against accidents and third-party accidents. Okay, we believe based on the car you own, the estimated amount of fee should be 120. Okay, fine. And the insurance contract can be analogous to a contract of exchange, which itself is deduced from a sale contract. So it's a sale contract for a service. The service is basically to cover some risk. So I have a risk. You offered to protect me against the risk, okay, in exchange for a fee. So what's gonna happen here? I'm gonna transfer my risk to you. So that's why we say conventional insurance. basically focuses on the concept of risk transfer. I don't want to take this risk, so I will transfer it to you. I will pay you some money. If I faced it, you will help. If I didn't, I don't need the money anymore. You get it. It's yours. Okay? So, under a contract of exchange, now what's the rule in Islam? One of the conditions of the subject matter is that there should not be any gharar, uncertainty. What do we mean here? Do not sell fish in the water. Do not sell birds in the sky. We have many rules in Islamic finance. Very simple rules, but very clear. Okay? So, if you want to buy something, the subject matter of the contract, the whole contract, the service or good, it can be service and a good. However, it must be specified in terms of quantity, quality, etc., which we lack here in the contract of insurance. So let's focus now on the Sharia position. Why do we have an issue with conventional insurance? The prohibition of charging a fee for an assumption of risk can also be seen from the civil law of some Muslim countries that derive from Islamic jurisprudence. For example, in UAE, it's not permitted, in the law of UAE, it's not permitted for the guarantor to charge a fee for his guarantee. So this is Islamic somehow, because guarantor should not receive more than the actual cost as fees. So if you want to guarantee me against some debt or anything, you may provide it for free. However, if you had some cost, if you incurred costs to travel, to come back, to use the phone, etc., you may charge me the actual cost, not higher. So this law is derived from Islam. So scholars allow only charging of fee to cover costs and expenses for the assumption of risk, but not to profit from it. However, now we have a problem. Last sentence. You shall not profit from that. Okay? So if insurance company want to do that, one way of doing it is maybe by not charging, not profiting. However, what's the goal of the whole commercial insurance business? It's basically a commercial project. It's meant to maximize profits. I have shareholders. The shareholders started this whole business to profit from. Higher the profits, the better. So we cannot just charge the costs. Okay? So let's get into more details by trying to focus on the fatwa of Sheikh Yusuf al-Qardawi. So most scholars are of the opinion that conventional insurance is haram due to the existence of three elements: maysir, gharar, and riba. Now let's read the fatwa. So Sheikh Yusuf al-Qardawi says, our observation that the modern form of insurance companies and their current practices are objectionable Islamically. They have an issue with Sharia compliance. However, he's saying this thing does not mean that Islam is against the concept of insurance by itself. We just discussed that. Islam actually recommends you to enter into such schemes. We discussed in the first class maqasid al-sharia and its relation to takaful, and how takaful can help in many aspects in basically achieving these maqasid of sharia. So not in the least, it only opposes the mean and methods. So Islam doesn't oppose the concept of insurance, but it opposes the means, how you achieve it, how you do it. If other insurance practices are employed which do not conflict with Islamic forms of business transactions, so if you find a way in conventional insurance to satisfy the requirements of exchange contract, it's fine. Since the concept is actually recommended in Islam, if you fix your method, make it Sharia compliant, everything will be fine. So Islam would welcome them. Not only says it's permissible, but it's welcomed, it's recommended. So based on this discussion, to render insurance permissible, Sheikh Yusuf Al-Qardawi continues, he says there are specific conditions to do that. Number one, every member who pays the allotted share of money must pay it on the basis of tabarru. So it's not a price anymore to protect me against an assumed risk. No, it's tabarru, it's donation. In the spirit of brotherhood, again, to help all in the pool. From this pool, help is given to those who need. However, now we have the other worry, which is we don't want the money to be sitting on the side. We want to invest it and grow it. Now, to do that, if any part of this money is to be invested, it's fine. You can invest it too. However, it should be invested in accordance with Sharia. So it's not permitted to the member to donate his share on the condition that he will receive a predetermined amount in the event of an unforeseen calamity. Rather, he will be paid an amount which will compensate. So the contract cannot say, if anyone gets sick, we pay them a fixed amount of money, 10,000, 20,000. Cannot be in this way. It must be based on the loss you're gonna get. Why? Remember, because we cannot pay you more than what you had before. You lost a house, we get you the exact same house. We wouldn't buy you a villa or a palace. It's not gonna happen. You shall not profit from it, but you shall go back to your previous state before the unfortunate event took place. So let's read this fatwa. So a fatwa issued by a committee comprising of leading scholars for the Saudi Arabia government. So the government of Saudi Arabia needed some help of the muftis regarding the insurance business. In Saudi Arabia, they have the cooperative model. We discussed it in Islamic, in the previous class in Takaful business models. So cooperative insurance is not only permissible by the Sharia, but also encouraged, especially when looked at from the aspect of cooperation towards welfare. You can always go back to the first class and try to remember how we linked it to many objectives of the Sharia, and it actually helped us in maintaining many of these, in serving the requirements of the Sharia, and help the people achieve their goals in this life and the hereafter as well. But, now there is a but there is a need to state as clearly as possible, very clearly, in the contract of insurance that the amount of money to be paid by participants is on the basis of donation. Again, we emphasize on the concept of donation because it simply eliminates the gharar. So no gharar anymore. We discussed why. To the said company, which can be used for the purpose of assisting fellow participants who require assistance according to the terms agreed, as long as these terms, again, are not in conflict of Sharia. So we discussed at the beginning of this class, part 1, that these contracts must be consistent with Sharia in all aspects. Why? Because the law governing the whole operations is derived from Quran and Sunnah. It's not man-made. Let's focus on some fatwa in Malaysia. So the National Fatwa Committee Malaysia deliberated on the question of life insurance. So life insurance, as you may know, is more problematic when it comes to Sharia. And below is a translation of an extract from the minutes recorded. So let's read together. Life insurance, as presently practiced by insurance companies, is in contrary to the Sharia. It opposes to the Sharia principles of contract because, let's say, why? It contains the following elements. Again, gharar, maysar, riba. So they didn't really elaborate, but they said it involves all of these concepts. As such, from the Sharia point of view, this is impermissible. So after this long discussion, we can ask ourselves the following question: what's wrong with conventional insurance? As we discussed it earlier in the fatwa of Sheikh Yusuf al-Qardawi, the purpose is fine. So green light, provide protection. Very noble, very recommended. We welcome it. The Sheikh Yusuf said, we welcome it if you do 1, 2, 3. But the modus operandi is problematic. Why? Existence of gharar, riba, and maysir. So let's get into more details. See how can we fix this contract. Okay, so the practice of insurance presently are not in line with the teachings of Islam in a number of ways. So we discussed why, but let's get into more details. Say where exactly there is riba, where exactly there is gharar and gambling. So many insurance contracts contain ujury, riba, as it promises to pay more than the premium paid. So now we have a problem. I paid you 100 money, currency. You paid me to pay the same currency but more units if I get in an accident. So I only pay you 120 a month. However, if I get in an accident, you may pay me 1,000, 2,000. So you pay me same money, same currency, higher amount. This is riba. Insurance companies invest the premiums which they have collected again in conventional banks. We basically invest this money in interest-bearing investments. We buy bonds, we buy securities, we buy many interest-bearing instruments. Insurance is a kind of gambling. We discussed that many times. Why gambling? As one can lose the premium. If you don't have an accident, you lose your premium. If you had an accident, which is basically something not desired, however, you get more money, so you profit. So basically here again, this is similar to a game of gambling. You pay a premium to join the game. If you get a loss, you profit, you get more money than what you paid, and sometimes you may get the same amount and you may lose the premium entirely. Very clear. It involves some aspect of gambling. So let's continue with this report. Note that this report was in 82 before Takaful started in Malaysia in 83. So it's clear that the insurance contract as practiced presently give rise to gharar. Al-ma'qud alayh here, the subject matter, is not clear. Why? Uncertainty. Whether or not the insured will get the compensation. So number one, I don't know whether you'll get the money or not. Number two, uncertainty as how much will I get? So 10,000, 20,000, 1 million, not sure how much. It's like lottery to me. Uncertainty as to when the compensation will be paid. So even in lottery, you know when the lottery will take place. Here you don't even know when will you have the accident. So more uncertainty again. Insurance companies, last point, insurance companies can earn profit or loss as a result of death or accident to risk people. Well, let's repeat this. How do companies profit or lose money as a result of people dying or having accident or facing the risks? So now again, many questions will arise. Is this easy to deal with using a buy and sell contract? Because now we will have some conflict of interest, so someone might benefit from the loss of others, and again, to profit more, I should not pay you a claim, so I should find a way maybe to prevent you from receiving the claim. Okay, so I will say maybe this accident is fake, even though it's not fake. So I'm not saying they do that. I'm saying there is a room to start playing with these things. So the system is not free of conflict of interest, because TO in Takaful works for participants. Insurance company the operator, they don't work for participants, remember, they work for shareholders. So the benefit of shareholders is not to pay participants. However, participants subscribe to get money. So you see here, again, the operator might be unclear on who shall they basically serve and where is the limit to stop that. Do we need any surveillance system? We need some automatic system to report for conflict of interest. It's all unclear, unfortunately, in insurance contract. So with this, we will end the discussion here. I hope you enjoyed the class. Thank you so much for listening. Please don't forget to write down your questions on a separate piece of paper with reference to the slide number so we can easily refer to it. Stay safe, everyone. Wassalamu alaikum wa rahmatullahi wa barakatuh.